the union budget, the much-awaited union budget, the first budget of the NDA government, the first budget of a government that has such a massive majority to be announced tomorrow. Ahead of that, let us ask someone who has seen many budgets and the economy responding to these budgets. Shubir Gokaran, Director of Research at Brookings India, as well, of course, former Deputy Governor, Reserve Bank of India, joins in. Well, first up, Dr. Gokaran, how should investors, or even for that matter, business, understand the economic survey? Is it just that economists' view? Should one read anything about the government itself? Do finance ministers take interest in the economic survey?
I think to some extent, but typically it's tended to be seen as a sort of wish list, as something that the economists in the finance ministry, of course we don't have a chief economic advisor now, but typically the chief economic advisor articulating a set of policy options which the government should be considering for a variety of things. And I think it goes back, the significance of it goes back to when the finance ministry was really the fount of reforms in the early 90s. And because it was so critical in the process, its articulations of what was needed were taken as a sort of signal of what was to come. I don't think that linkage between what the survey says and what the budget contains, or for that matter what policy actions follow, is that close now. For the last several years we've had the survey being quite ambitious in terms of reform agendas, but these not being followed through by either the budget or the government later on. So I think it remains, that's the way I'd see it. It is going to be a statement of intent, of aspiration. This time is a little different because we don't know, how that linkage is, whether that linkage is going to be re-established or not. We have a new formation in place, new people, new political circumstances. As you said, this is a very different political situation than we've had for the last 30 years, and that may actually add some muscle, if you will, to the aspirations being stated. So if the minister has played a role in this and has shaped the message, then I think it would obviously be a little more indicative of the kind of priorities that the government has and the kind of actions it intends to take.
Dr. Gokaran, good morning. So that's about the economic survey. But what about the budget itself? I mean, there is a high expectation that this time around the budget will be pro-market. So in a sense, there will be cutting of subsidies, there will be shifting from consumption to encouraging investments, etc. Do you see that play through, or given the fact that it's been only 45 days for the new government, one is being too optimistic?
I think so. I think we should not see this budget in isolation as a one-off event. I think this is an opportunity to, and particularly again going back to the issue of the majority, that this is the first time in a long time we've had a government with a clear 5-year horizon. It faces no political threats at this point. And it can afford, therefore, to take a longer-term view, lay out a sort of time frame, a timeline, things that it wants to do over the 5-year period, or perhaps the first 3 years, or something slightly medium-term to long-term. And that it needs to articulate in this budget speech very clearly. The finance minister needs to articulate not just a vision for the ministry, but a vision for the government itself. And then perhaps actions that are consistent with that long-term strategy being visible in the budget. So you may not see the kind of shall I say, intensity that a lot of people seem to be expecting in the first budget, but I would really look at this as a first step, and the full budget for 15-16 as a sort of a follow-on in which some of the more dramatic announcements, if you will, the actions, the more radical actions on subsidy reform, on investment and so on, be taken. Of course, the things have to be done quickly to provide reassurance, and to that extent I would expect some such reassurance, some signal to be sent. Let's not forget also that although we don't yet have a firm handle on the monsoon, it is looming as a pretty significant risk. There's another week to go before we will be able to make the decision on whether it's failing or not. All indications now are that it is failing, and if that's the case, then the budgetary and the fiscal situation is going to be quite different than if the monsoon had been normal. So we've got to take some of that into account as well. So I think a little bit of caution in the announcements also some signaling of the risks and the kind of steps that might be necessary to deal with those risks. I think those need to be articulated as well.
Okay, Dr. Gokaran, according to you, what will be a correct or reasonable revenue growth assumption, tax revenue growth assumption? I think in the vote on account, the revenue growth assumption was almost 20%, if not a little higher than 20%. According to you at this juncture, what will you consider reasonable when it comes tomorrow?
I think if you take the growth prospect for this year as roughly about 5.5 at best, with the monsoons, you may even be on the lower side of that range. Inflation at around 7.5, 8, that gives you a sort of business as usual 13-14% revenue growth. And then add on to it some sort of administrative efficiency and expansion of base and so on. So you'll be looking at 14, 15, maybe 16% as a not unrealistic target in this situation. 20 to me seems a little optimistic. And of course, it depends a bit on the sector breakdown also, because the tax, particularly indirect tax distribution across sectors is not very even. So manufacturing tends to contribute a little more, but I think that's evened out with the service tax, so that's not so much of an issue now. But say 15-16% is where I would see a reasonable target with a sort of 5%, 5.2, 5.3 growth expectation, and a 7.5% inflation, plus some efficiency improvement as we go along.
How would you comment or view the fiscal deficit percentage itself? If it came in at 4.5%, either because the government chose to kitchen sink and take all the unpaid bills of last year, would a 4.5%, a similar deficit as last year, worry you as inflationary? What would be your comment if it is 4.1, if it is 4.5?
No, I think the important thing this year, and particularly in this situation, is transparency. I think there's just been too much focus on whether the numbers are clear or not, whether there's some fuzziness to them for whatever reason. I don't think we can embark on a process of fiscal consolidation without having the true picture in front of us. And this is really the best opportunity you have to put that true picture in front of the people. Basically, take all of the obligations, the debts, the liabilities that have been built up and can be postponed or not, in order to present a sort of somewhat more healthy picture. Let's just clean it up. I think this is the best opportunity we have to do that. So I won't be so worried about the number as about the credibility of the number. If people say, okay, this is a slightly high number, but we accept it as the reality, I think that would be a sort of major improvement in the state of the debate, and we could move on to then talking about, well, how are we going to fix this, rather than worry about whether the number is correct or not, because we're not going to get good policy responses that way. So the number doesn't worry me so much as the sort of credibility of it.
All right, Dr. Gokaran, we leave it at that. Thank you for joining us and laying out a couple of important expectations this time around. Thanks so much.